Hello everybody. This video explains journals. Companies use cash and bank book to record cash and bank transactions, sales book to record the sales transactions, purchases book to record the purchases transactions. These are the books of original entry. Then use general ledger to do the posting of transactions to complete the double entry. General ledger is a ledger book with all the ledger accounts, such as capital account, expenses accounts. Some big companies may have subsidiary ledgers. There are some transactions and events that do not relate to cash, bank, sales, or purchases. General journals are prepared to record these transactions. These are some formats of journal. Example 1. First is the date. Debit to the account to record the debit entry. Amount. Credit to the account to record the credit entry, amount, and then give a brief explanation of the journal. This journal involves two ledger accounts. A debit is matched with a credit. Example 2. First is the date. There are two debit to accounts to record the debit entries. Amount. One credit to the account to record the credit entry, amount, and then a brief explanation of the journal. This journal involves more than two ledger accounts. Debit total should be equal to credit total. Example 3. First is the date. There is one debit to the accounts to record the debit entry, amount, two credit to the accounts to record the credit entries, amount, and then give a brief explanation of the journal. This journal also involves more than two ledger accounts. Debit total should be equal to credit total. Here are some examples to explain how to prepare journals. Example 1. On 1st February, year 2010, Mr. Wong invests in the company with a machinery 9,000. This transaction does not involve cash, bank, sales, or purchases. Journal entries should be prepared to record these transactions. Mr. Wong invests in the company. That means Mr. Wong injects capital in the company with a machinery 9,000. According to Golden Rule, addition of capital should be on the credit side. Addition of assets, that is the machinery, should be on the debit side. So first prepare the journal entry. Date, debit machinery account 9,000, credit capital 9,000. Then follow this journal entry to post to the ledger account in general ledger. Debit machinery 9,000, credit capital 9,000. Example 2. On 1st May, year 2000, Mr. Chen invests in the company with a machinery 6,000 and a truck 5,000. Mr. Chen invests in the company. That means Mr. Chen injects capital in the company with two assets, a machinery and a truck. So according to Golden Rules, Addition of capital should be on the credit side. Addition of assets, that is machinery and truck, should be on the debit side. First, prepare the journal entry. Date: debit machinery account 6,000, debit truck 5,000, credit capital 11,000. Then follow this journal to post to the ledger account in general ledger. Debit machinery 6,000, debit truck 5,000, credit capital 11,000. This journal involves more than 2 accounts. Amount entered as debit should be equal to amount entered as credit. Example 3. Debtors XYZ company declared insolvent. 400 was agreed to be bad debt on year end. Bad debt is a kind of expenses. Debtor declared insolvent. That means this customer cannot repay its debt owed to your company. So according to golden rules, addition of expenses, that is the bad debt, should be on the debit side. Reduction of the debtor's debt owed to your company should be on the credit side. First, prepare the journal entry. The date: debit bad debt 400, credit debtors XYZ company 400. Then follow this journal to post to the ledger accounts in general ledger. Debit bad debt 400, credit debtors XYZ company 400. Year-end adjustment journals. Example 4. December rent 1,000 was not paid at year-end. This unpaid rent incurred in the financial year, so it should be included as operating expense of the company. This company owe rent to other company, so an accrued expenses account should be created to record this liability. Accrued expenses are current liabilities of the company. So according to golden rule, addition of expenses, that is the rent, should be on the debit side. Addition of liabilities should be on the credit side. So first, prepare the journal entry. Date: debit rent expenses 1,000, credit accrued expenses 1,000. Then follow this journal to post to the ledger accounts in general ledger. Debit rent expenses 1,000, credit accrued expenses 1,000. Example 5. Insurance 800 for next year was prepaid at year end. This prepaid insurance should not be included as operating expense in the financial year. A prepayment account should be created. Prepayments are current assets of the company. So according to golden rules, reduction of expenses, that is the insurance expenses, should be reduced. That is on the credit side. Addition of assets should be on the debit side. First, prepare the journal entry. Date: debit prepayments 800, credit insurance expenses 800. Then follow this journal to post to the ledger accounts in general ledger. Debit prepayments 800, credit Insurance expenses 800. Journal for correction of errors. Example 6. At 31st December year 2000, the accountant of Star Company discovered 10,000 salaries was wrongly treated as electricities. So correction is required. Salaries should be increased 10,000. Electricity should be reduced 10,000. According to golden rules, addition of expense, that is the salary, should be on the debit side. Reduction of expenses, that is the electricity, should be on the credit side. First, prepare the journal. Date, debit salaries, 10,000. Credit electricity, 10,000. Then follow this journal entry to post to the ledger accounts in general ledger. Debit salaries, 10,000. Credit electricity, 10,000. Hope you guys understand how to prepare journals. Thanks for watching.